Welcome to today's deep dive into the world of real estate investing. I'm here to reveal the exact strategies that wealthy investors use to build massive portfolios and generate consistent passive income, strategies that most people never discover. If you've ever wondered how some investors seem to effortlessly acquire property after property while others struggle to buy their first rental, you're about to discover the fundamental differences in their approaches. Today, we're unlocking the vault on real estate wealth building. We'll explore how successful investors think differently, act differently, and most importantly, how they leverage systems that the average person simply doesn't know exist. By the end of this video, you'll understand the core principles that separate wealthy real estate investors from everyone else, and you'll have a clear roadmap to start implementing these strategies yourself. Let's start with the biggest myth about real estate investing, that it's only for people who already have money. This couldn't be further from the truth, yet it stops countless people from even trying. Most people believe you need tens of thousands in cash, perfect credit, and extensive market knowledge to succeed. They think real estate is this exclusive club where only the wealthy can play. But here's what's really happening. This mindset is exactly what keeps people on the outside looking in. The actual challenges aren't about money or credentials, they're about understanding systems and strategies. Most beginning investors face these common obstacles. First, they focus on finding the perfect property instead of understanding market dynamics. They spend months analyzing every detail of one potential deal, while experienced investors are evaluating dozens of opportunities. Second, they try to do everything with their own money and credit. This severely limits their growth potential and keeps them stuck in the slow lane of wealth building. Third, they treat real estate like a side hobby instead of a business. They don't build the systems, relationships, and processes that accelerate success. Here's the truth: wealthy real estate investors aren't smarter than you. They simply have access to different information and strategies. They understand concepts like leverage, cash flow optimization, and market timing that aren't taught in traditional education. Most people learn about real estate from television shows or basic online content that barely scratches the surface. Meanwhile, successful investors are using sophisticated strategies that most people never even hear about. This information gap creates a massive advantage for those who know these strategies and a significant disadvantage for those who don't. Let's start with the foundation of real estate wealth building: leverage. Smart investors are focusing on assets that are pulling away from the pack and offering diversification opportunities in the current market environment. Leverage isn't just about getting a mortgage. It's about systematically using other people's money to acquire assets that generate income and appreciate over time. Wealthy investors understand that their own cash is their most limited resource, so they preserve it and use it strategically. Here's how this works in practice. Instead of buying one property for cash, a skilled investor might use that same cash as down payments on 4 properties. Now they control 4 times the asset value, generate income from 4 properties, and benefit from appreciation on 4 properties. But it goes deeper than traditional mortgages. Advanced investors use strategies like seller financing, private lenders, hard money loans, and partnerships to acquire properties with minimal personal investment. In 2025, lower interest rates should allow buyers and sellers to move closer together on pricing, meaning liquidity will continue to improve from the current low levels. Successful investors understand how to read and respond to these market signals. Wealthy investors don't wait for perfect market conditions. They adapt their strategies to current conditions. In rising markets, they focus on appreciation plays. In declining markets, they hunt for distressed properties and cash flow opportunities. The key is understanding market cycles and positioning yourself accordingly. It's always a good idea to focus on cash flow over appreciation as a foundational strategy, but skilled investors layer additional approaches based on market conditions. In 2025, consider spreading your investments across various asset classes within real estate: residential, commercial, industrial, and even niche markets like self-storage or senior housing. Diversification isn't just about owning multiple properties. It's about strategic asset allocation across different property types, markets, and investment strategies. This approach reduces risk while maximizing income potential. Think of diversification in layers. Geographic diversification protects against local market downturns, Property type diversification provides different income streams, and strategy diversification allows you to capitalize on various market opportunities. Wealthy investors obsess over cash flow because it provides the foundation for everything else. They understand that positive cash flow isn't just about rent minus expenses. It's about optimizing every aspect of property performance. This includes strategic property improvements that increase rent, efficient property management systems that reduce costs, and tax optimization strategies that maximize after-tax income. Every dollar of additional cash flow accelerates wealth building exponentially. Successful investors have multiple acquisition strategies beyond traditional purchases. They use techniques like wholesaling, fix and flip operations, real estate investment trusts, and private partnerships to access deals that others never see. Networking with real estate agents, property managers, lenders, and fellow investors can lead to joint ventures, access to off-market deals, and insights into emerging market trends. This creates a competitive advantage that compounds over time. Here's the strategy that truly separates wealthy real estate investors from everyone else. They understand that real estate is fundamentally a relationship business, and they build networks systematically and strategically. This isn't about casual networking or collecting business cards. It's about creating mutually beneficial relationships with key players in the real estate ecosystem. Lenders, contractors, property managers, wholesalers, other investors, and industry professionals. Your network becomes your net worth in real estate because deals flow through relationships. The best opportunities, the ones that create exceptional returns, are often shared privately before they ever hit the public market. When you have strong relationships with wholesalers, they bring you deals first. When you have solid relationships with lenders, you get faster approvals and better terms. When you have good relationships with contractors, your renovations cost less and finish faster. By leveraging various networking strategies, from engaging with local and online real estate groups to offering value through education and community involvement, professionals can forge meaningful connections. The key is approaching networking strategically. Instead of trying to network with everyone, identify the specific types of people who can accelerate your success and focus on building genuine relationships with them. This means attending industry events, joining investment groups, participating in online forums, and consistently providing value to others before asking for anything in return. Let's summarize the core strategies that separate wealthy real estate investors from everyone else. First, they master leverage by systematically using other people's money to acquire assets, allowing them to control more real estate and accelerate wealth building. Second, they understand market timing and adapt their strategies to current conditions, focusing on cash flow while positioning for appreciation opportunities. Third, they diversify strategically across property types, markets, and investment strategies to minimize risk while maximizing income potential. Fourth, they optimize cash flow through systematic property improvements, efficient management, and tax optimization strategies. Finally, and most importantly, they build strategic networks that provide access to better deals, better financing, and better opportunities. The fundamental difference isn't about having more money or better credit. It's about thinking systematically, acting strategically, and building the relationships and systems that accelerate success. Real estate investment will be shaped by a combination of technological advancements, shifting market dynamics, and increased demand for sustainable, flexible properties. Those who understand and adapt to these changes will thrive. I want to hear from you in the comments below. Which of these strategies resonates most with your current situation? Are you already implementing any of these approaches, or is there one you're excited to try? If you found this valuable, make sure to subscribe and hit the notification bell because we're just getting started. Next week, I'm releasing a detailed video on exactly how to find and evaluate your first investment property using these same strategies. And if you're ready to take your real estate investing to the next level, check out the video, Why a Housing Crash Could Make You Rich. I've linked in the description and info card above. Remember, real estate wealth building isn't about luck or timing. It's about understanding and implementing the right strategies. Now you have the blueprint. The question is, what are you going to do with it?